audio is clear and screen is visible to all of you. I just recently changed my headphone also, so the audio part it should be working perfectly fine. What's up? How is everything going with you guys? Okay, so I guess the audio is screen is visible to everyone, right? Any issues with the audio or the screen part? Much improvement, yeah. I'm actually using the headphones, these wireless headphones from ASUS, so everything should be working fine. The market updates are spot on, my king. Thank you so much, Vidi. Thank you so much. Although quite recently, I've not been able to give too much of the market updates. Although I started the series where I would, where I was planning on giving the market updates like every 15 minutes or so. But since I have been traveling a lot for the past 2 to 3 weeks. In fact, I would be traveling the next week also to Glasgow. So that's why I was not able to keep up with that market update series. But yeah, very soon, like in a week or so, I would be permanently settled in, and every 15 minutes, every 20 minutes or so, you guys would be having the lower time frame market updates because actual action is basically taking place on the lower time frames. Okay. All right. So let's start the live stream. I would be starting with the general market update because I think that probably is the most interesting part, right? So the last time we did the live stream, we were still trading above in this area. We were still very much bullish. We had not broken below the $66,000 range. That's why, a lot many things have changed during the past 2 to 3 weeks. Okay, so first of all, let's talk about the whole story. Let's try to understand that how things have been playing out. Okay, because there is this complicated part first of all, and then there is this more basic part, something that you can actually understand from the perspective of fundamental technical analysis also, something that you can basically, comprehend if, you only have understanding of something basic like support and resistance. Okay, let's first of all try to understand that. Okay, I would be explaining the whole part happening right in. Okay, so back on like 17th or 20th of May, we were very much bearish because price once again it was continuously making lower lows and lower highs. Although we were having quite decent of a recovery, after price had bounced from like 56,000, $57,000 region. But the important part was that still price it was very much bearish, and for price to turn bullish, all it had to do was simply just break above the $67,200 region and give a 4-hour candle close above. And that is what pretty much happened back on 20th of May. I went for vacations back on, I guess, 23rd or 24th of May. And on 20th of May, this was the 4-hour candle close that we got. And this was a very important candle close because back on 20th of May, price closed above $67,200 region, and price once again on the BTC chart was once again bullish. Okay. Now, whenever I'm starting with my live stream, whenever I start general market update, I always try to give the complete story. Now, listening to this story, it's extremely important, and that's why we have come up with the idea that every live stream it would be uploaded, in 24-hour time span. Okay, so that the majority of the people who are not able to attend the live stream, they get to have they get to have the information as early as possible. Now, once again, the reason I try to narrate this whole story is just to give you guys an idea that all of these things they're absolutely interconnected. Okay. And in case if you are somebody who is just blindly taking long and short trades, in case you are someone who is just absolutely clueless about what exactly is happening. For example, Sergio, he recently joined my mentorship program, but like a week or so ago, but he was telling me just yesterday that he took a long position on BTC. Now, if you are someone who took a long position on BTC, or like who took a long position any of the other altcoins quite recently, that obviously means that you did not have a good understanding of what exactly is happening in the market. Although you could have taken this long position, we would be talking about that part also. I would try my best basically to dissect every single aspect of the chart, every single position that you could have taken. Okay. So, back on 20th of May, price breaks and closes above 67,200, and that's where you should have got the idea that okay, I can no longer take any sort of short position because structure after such a long time, right? Structure after such a long time, like after 2 months or so, it has once again been bullish. Okay. And all of these things, just like I mentioned, all of these things, they're simply just interconnected with each other, right? This was the time, for the past 2 to 3 months, the inflow into these spot ETFs, it was not too good. There was actually an outflow happening, okay? And I said this thing in my previous live stream also that if you would look at the recent price action for BTC, like for the past 5 or 6 months, you would notice that it has been extremely sensitive, to the inflow or the outflows into these spot ETFs. For example, prior to 20th of May, the outflow was happening from these spot ETFs, and that's why price action it was very much bearish. From 20th of May, we start having major inflows into these spot ETFs, and that's how price breaks above 67,200. And once again, from the perspective of structure, also, you can actually see that it was very much bullish. Okay, and I have mentioned this thing before as well. Whenever you have very small pullbacks along the way, whenever price is moving, whenever you have very small pullbacks, then you should have got an idea that okay, this trend is actually very strong. So, starting from this point, starting from 61,000 all the way up to 67,000, you would actually notice that there were hardly any pullbacks happening, and price actually left too many imbalances behind. In fact, it is about to fill this very important imbalance right here at 63,400. But the point is that it was actually a very impulsive move towards the upside. So this was your impulsive wave, this was your corrective wave, and once again this was your impulsive wave. Okay, so we break above 67,200. The market structure, it is once again the change of character happens around here. The market structure shift happens around here. The structure, it's once again being bullish. Okay, you should have got the idea back on 20th of May that okay, I can no longer look for any sort of short position because the structure is bullish, and instead I should be looking for pullbacks. I've explained this strategy quite a lot of times during my live streams, during my lessons as well, that it is an extremely easy thing to do. Okay, all you have to do is just spot the structure, wait for the pullback. Just make sure that you know how to draw Fibonacci retracement tool. Just make sure to spot, the demand and supply zones, and that's all what pretty much you need to do. Okay. So, this is your impulsive wave. This is a corrective wave, small corrective wave, and once again, this is your impulsive wave upside. Okay. So as soon as the structural break happen, as soon as the structure change happen, this is a change of character, impulsive wave, corrective wave, and impulsive wave. Now you have got double confirmations basically because not only the change of character happened. You see, whenever we whenever we speak about the structure theoretically, let's suppose that this is a bullish structure, right? The first element that would be telling you, okay, that the structure shift is happening, that the market is changing its direction, is a change of character. But an extra added confirmation you would get when in the same wave you would actually get a break of structure also. So in this situation, you can actually see that impulsive, this was your impulsive move towards the upside in which market was being bullish. And then price broke below the previous low, which gave you a change of character. And after a change of character, price made a small recovery, made a small retracement, and after the retracement, you got a breakout structure, the first new breakout structure in this bearish leg. So you have an added confirmation. So always remember that, whenever there is a breakout structure after the change of character, it just gives you, you talk about the smaller time frame, for example, 5 minute time frame, or you talk about the 4 hour time frame. It just gives you an added confirmation that okay, this move is solid, just going to continue in its original direction. Because if you would solely rely on change of characters, especially when you're talking about the smaller time frames, the change of characters, they might be happening too often. But a break of structure after the change of character is basically a confirmation for you that okay, market actually is reversing its direction. Okay, so this was your change of character break above 67,200 exactly. Then market pulls back a little bit and then gives you a break of structure. And this was the confirmation that okay, this is your swing low, this is your swing high, draw Fibonacci retracement once again, start looking for long positions in this region around here. Okay. We talked about, okay, let's try to just complete this story. Okay. So, you got the first chance of entering into this long position somewhere around here. You could have done multi-time frame analysis. You could have used the basic fundamentals of support and resistance. We would be talking about that shortly. You could have done any other thing, and using that, you could have taken a long position around here, or maybe somewhere around here, or maybe around here, or maybe around here. So you had first chance, second chance, third chance, fourth chance. You had multiple chances of taking a long position around here. Okay. So, you had all the chances in the world to take long positions because structure, once again, it was very much bullish. So there was no point taking a short position. I do remember that during my last live stream, I did mention about this short trade. Now, this short trade, it was basically an exception. The reason I say exception is because the structure, it was very much bullish, but we were actually trading against the trend. Okay. This was basically a reversal trade. If you guys don't know, any sort of trade that is based upon structure, it can easily be categorized into two different categories, right? The first one is the reversal trade, and the second one could be continuation trade. If you would focus right here, you would notice that the change of character happens, the break of structure happens, and the structure continues. You are supposed to take a long position around here. You're planning to take a long position around here, and this is basically a continuation trade because you're entering somewhere in the middle of the trend. Okay. And the only problem with the continuation trades is that at some point the continuation it may stop. At some point the reversal may happen. So you cannot simply just keep on playing with the continuation trades, over and over again. So let's suppose that, just to give you guys an example for this, let's suppose that this is an uptrend and you say that, okay, let's take a long trade around here. This is a continuation trade because you know that this is an uptrend. So you would wish to take a long position. You would wish to take a long position around here as well. Now that you've taken two long positions, possibly you would take another long position, a third long position as well. But you know this thing, you must realize this fact that at some point you would be taking a long position, let's suppose somewhere around here, and market would be reversing its direction. Okay, that's the only problem with the continuation trades. With the reversal trades, also you have the liberty that you would be entering either right at the top of the move or either right at the bottom of the move. So you would be able to catch the bigger move. Okay. But obviously with the reversal trades, you would need more confirmation like a change of character and then a break of structure. It has its own element. We can basically talk about that some other day. But this trade, if we talk about this one right here, it was absolutely going against the trend. And the major reason for taking this trade was, first of all, I had some information, okay, that price would be taking strong rejection from $72,000 area. And secondly, if this is, by the way, the Binance US chart, and the price action in Binance US chart, it may look slightly different from the Binance spot chart. If you wish to have a clear picture of the price action, just don't look at the MACD chart, just don't look at the Binance US chart, just don't look at the Bybit futures or like any other exchanges chart. Because Binance is the single largest exchange, you can actually look at the Binance spot chart, and that's where you would get the most precise amount of information. Because, for example, if you would open up, this picture exactly on the Bybit chart, you would notice that this wick it might be going slightly higher, or this one it would be slightly below this wick. Okay, but if you would open up the Binance spot chart, you would notice that these two wicks they were exactly at the same height. And that was also the reason, the simple man theory. Those of you who have been the premium members, they would know that, okay, that based on simple man theory, we see equal highs, we simply just take a short position. And those equal highs obviously need to be the major swing highs or the major swing lows. In the case of swing lows, you would see swing lows, you would try to take a long position. Okay, simple man theory. And for those of you who are premium members, they would actually know about this because I have been talking about this in some of my posts also. Okay, but yes, I admit completely that this was basically going against the trend. This may have been a very good short position. We closed it too early at this support area. But the point here is that we could have taken multiple long positions around here, around here, and around here based on structure. Now, obviously you cannot keep on playing the continuation trade. At some point, the reversal would be happening, and that's what we see happening back on 14th of June. So back on 14th of June, I was mentioning this in some of my posts also that as soon as price breaks below $66,000 region, it was when price was trading back at around 69, 60, $70,000 region. I was continuously mentioning that as soon as it would break below $66,000 region, it would give a candle close, 4-hour candle close below 66,000. That's where once again the structure it would be shifting from being bullish to being bearish, and you should no longer be looking for short positions. Okay, so once again, you can actually see that how picture perfectly all of these things are playing out. Okay, so this is your impulsive wave. Okay, market gives you your character, then gives you a pullback and asks you that you can take a short position. Okay, once again gives you a break This breakout structure, it was a further confirmation, just like I told you earlier as well, that whenever in a new wave, after a change of character, you get a breakout structure, it basically confirms that, okay, the trend is going to continue in its original direction. So it had become very much obvious as soon as price broke below this area, $65,000 area back on 18th of June, the second day of Eid, it had become very much evident that, okay, price would not only go lower, but it would also break below this support area and it would go further down because the next support region, it's nowhere close. There is this small support area around 63,200, and then the next support, it's simply just at 60,000, 61,000. And in my opinion, that's where we're actually headed towards. Okay. So, a break of structure we get around it. Once again, we get another impulsive wave, once again, corrective wave. And, since last 24 hours, I was continuously mentioning this in my post that, okay, price has to go lower because that's what you would see based on structural elements as well. You have an impulsive wave, you have if I draw it for you guys, you have an impulsive wave, you have a corrective wave, you have an impulsive wave, you have a corrective wave. And the reason I was mentioning that we would go lower, we would break below the support because the impulsive, we are in a downtrend, and obviously impulsive wave has to break below this low, right? So it was very much obvious that we were going lower, and that's what actually happened. Okay, so, we not only broke below this low, but we are also breaking below this support region as well. Okay, so we have got another break of structure around here. Just this morning, we got another break of structure. And by the way, I was taking the class just yesterday when price was trading around 66,400, and I did mention this to my students also that if I was not taking the class, I should have taken a short position immediately. Once again, this is your impulsive wave, and a lot many people actually don't know about this thing. Whenever I'm talking about Fibonacci, I always say that the major problems that you encounter while drawing Fibonacci retracement is that you do not understand the main definition of this tool. This tool is meant to be drawn in an impulsive wave, and it is supposed to give you the length of the corrective wave. So you draw it in an impulsive wave. This is your impulsive wave, start of impulsive wave, end of impulsive wave. And it told you that, okay, the major supply zone is somewhere around here, and you could have taken a very beautiful short position around here. And in fact, based on the smaller time frame structure, based on the 5 minute time frame structure, once again, I did mention this in my market update just last night around 11 p.m. when price was trading around 65,200. I did mention that 65,200, it's a very beautiful short trigger. And that's where I actually took a short position myself. Okay. So once again, a very good short trigger around here. And now you would have the opportunity if you would draw once again Fibonacci retracement from this swing high. This is a swing high, okay? And if this happens to be a swing low, you would have another opportunity of taking a short position around 65,400 or $65,500 region, okay? If price returns back to this area, you can actually take a short position, okay? So this is everything from the perspective of market structure. Now, understand all of this. Let's understand all of this from the perspective of the basic fundamentals of support and resistance also. Okay, so looking at this image right here, you would notice that okay, this was your resistance area. Price gives you first rejection, price gives you second rejection. Okay, and if you would look back historically as well, this was another rejection happening around. Was another rejection happening around here, which obviously means that this area that I have drawn around here, this region, it is actually a very good. Um, I'm sorry, this region actually right here is very good. It is actually a very good level. Okay, so back on 20th of May, it was a very good resistance area. Even if you would extend this a little bit, you would notice that historically speaking, also price was continuously rejecting off this region. Okay, rejection, rejection, rejection. Finally, price breaks above. And if you have been taking some of my live streams, you would know that this is the time when I actually take a longer short trade. It breaks above this resistance area, turns it into the support, consolidates a little bit, comes back, gave a Pico retest at this level. This was the first retest that I have seen in my region. The second bounce happens, a smaller bounce. Once again, a third bounce happens, a smaller bounce. So once again, all of these very good opportunities. At least the first two were the very good opportunities for you to take a long position just on the basis of the basic principles of support and resistance. Once again, this was another a good opportunity to take a long position. Why? Because of the deviation move. Okay, what exactly is a deviation move? Let's try to understand this. let's suppose that you have a support area around here. Okay, price has been bouncing off the support area. Okay, at some point, what would happen is that price would slightly break below the support area, and this you would see happening a lot many times on the chart. Price would slightly break below the support area. Okay, now two things are happening in this situation. A lot many people who were immature, who were noticing this support area, they were thinking that probably price is forever going to bounce off this support, because that's the main thinking of newbies as well. They would draw a support, they would draw a resistance, and they would start thinking that okay, price is forever going to be bouncing in between these support and resistance regions. But they do not understand that there are certain elements that would come into play. At some point, resistance would be breaking. At some point, price would break below the support area. And in this situation, also, a lot many people who, why did you take a BNB short? Uh, I would be giving a perspective on BNB short as well. When do you take a look at the lower time frames? Okay, that both of these questions I would be answering. First of all, let me explain deviation. Okay, so price would be breaking below the support area. What would be happening is that a lot many people who were taking the long positions around there, who were newbies, who were thinking that okay, price would be bouncing off this support, they would either get stopped out, they would either get liquidated, or they would either be panic closing their positions. Okay, at this point, the market makers, they would immediately reverse the price. What would be happening in this situation is that those people, once again, who were newbies, who were immature, they saw price breaking below the support area, and they would immediately try to take short positions around it. Once again, the stop losses would be placed above this above this region, and our price would break below and impulsively move back up. All these people who took short position, they would either be getting liquidated, getting stopped out, or getting knocked out, or getting panic closing their positions. In all of these situations, the short positions, they are getting closed, meaning buying is taking place. And eventually, you would have an impulsive move because of buying taking place towards the upside. So this turns into a classic deviation move, whatever you would like to call it, fake out or deviation. Okay. So in this part as well, this was very important, a very major support. But you normally, how exactly do you trade a deviation move? You actually see a deviation move happening, and by the way, you can see it in reverse as well. If you would invert the scale, let's suppose this is the resistance area, price breaks above resistance area. Those people who were taking positions around here, they got liquidated, stopped out, and they panic closed their position. And, those people who saw this resistance turning into support, they would immediately try to take the long positions around here. And once again, as price would impulsively move back down, all these long positions, they would also be suffering the same fate. And in this situation, you would immediately try to take a short position around here, place a stop above this high, and then try to enjoy this whole move down. Okay, so in this situation as well, as soon as you would see a deviation move happening, you would take a long position, place your stop below this deviation move, and target the new regions ahead. Okay, so similar is the situation right here. You see price impulsively breaking below this support and then impulsively moving back up. And after a few candles, you could have realized that okay, this is a classic deviation move. So let's immediately take a long position, place my stop below this low, and then just target whatever the regions you have to target. Okay. For example, in this situation, you could have selected this is your TP, this is a good order block around here, and then on the basis of Fibonacci also, this was a good zone to target. Okay, so finally we break below this support area, turn it into a resistance. How do we know that it has turned into a resistance? Because price, as you can see, has been consolidating in this range. So consolidation happens, price gives a first retest, and then simply just gets rejected off this area, a small bounce, and then simply just breaks below. And we will be seeing that if this move turns into a deviation move, or if this move simply just turns into a break below the resistance area. If price consolidates a little bit around it and then comes back to this area, we would be taking a short position obviously, and we can simply just target 60k, 61k. So not just on the basis of these the basic elements of market structure, but on the basis of some fundamentals of support and resistance also, you could have easily just traded all of these moves. Okay, I just told you short position, long position, long position, once again, another long position, once again, another short position. So you don't really need anything complicated. You just need to be able to draw support and resistance correctly, and you need to be able to just identify the good levels accurately, and you just need to know that okay, support turns into resistance or resistance turn into support. Someone asked the question that what exactly is the reason for taking the BNB short? The same exact logic applies right here as well. You have the daily time frame chart. this is, by the way, an ascending triangle. How exactly an ascending triangle plays out? Okay, so an ascending triangle is basically a triangle which looks something like this. You have a resistance area, and then you have an ascending channel, something like this. I'm sorry. You have an ascending channel which looks something like this. Okay. So price would be moving in this channel. Okay. Price would be getting rejected off this area, rejection, rejection, rejection. If you would go by the book, then an ascending triangle, price would break above, consolidate a little bit, come back, retest at this area. That's where you would be taking a long position and price would move towards the upside. But in this situation, this is the classic example of deviation and pattern failure. You know that, price breaks above this region. First of all, price breaks above this region. The first thing that happens is that all those people who saw this ascending triangle, they would simply just try to take long position. This is the first category of people. Obviously, they got stopped out, meaning selling took place. Okay, this is the first thing. Second thing is that all those people who saw this resistance turning into support, they saw a small move happening, they tried to take long positions around here. They got obviously stopped out if they had places stops below this low. Once again, the selling took place. Secondly, I just told you that deviation move, as soon as it happens, price immediately breaks above, then immediately falls back down. You could have taken a short position there. But ideally you could have waited for price breaking below this trend line. And we know that the trend line price is broken below this trend line. There is an obvious sort of liquidity. All those people who took long position, they place their stops below these lows, below this low, below this low, or below these lows. So all these stops that have been placed below this low, they are generating an obvious amount of liquidity or obvious amount of region where there have been a lot many stop losses placed. It's only a matter of time that price will move impulsively back down to 501 region, in my opinion. Okay, so that was the whole logic behind taking a BNB short. Obviously, it's a daily time frame chart, so it would take some time to play out. And also, there is every possibility that price would just come back, retest this resistance area or retest this trend line. It's perfectly fine. Ideally, we should have entered back at the time of retest, but I simply could not wait. Instead, I said that okay, let's simply just place my second entry around here and the third entry at this 50% imbalance. Okay, so that was the whole logic behind taking the BNB short. When do you take a look at the lower time frame? So basically, I have three. Those of you who are my students, they would know that there are basically three entry models that I'm normally using. Okay, whenever it comes to BTC, I only use the scalping entry model, not the higher time frames, 4-hour time frames, because the scalping entry model, it takes into account the 5-minute time frame chart. Then there is this entry model which is solely based upon the confluences like support, resistance, trend line, chart patterns, etc. And that's a very complex entry model. And then there is the second entry model, which is based upon multi-time frame analysis or the top-down approach. So the lower time frames I only use whenever I'm working with, specifically BTC, or whenever I just have to have a multi-time frame analysis. Whenever I just need to do multi-time frame analysis, meaning just need to have a proper entry confirmation at the lower time frames. For example, if I show you my alert log, I recently got the alert for gas USDT. Okay, so in this situation, gas USDT MTL. Okay, so in this situation, you can actually see that this is the resistance area for MTL, right? This is the resistance area for MTL. MTL actually is rejecting off this resistance area. So I have two choices. Either I can simply just take a short position as the price is rejecting resistance area, or instead I can multiple confirmations on the smaller time frame as well. That's when I would simply just be using smaller time frame. So what I would do is that, normally, I would simply just draw 4-hour time frame chart and I would say that, okay, this is the 4-hour time frame chart. Price broke below this support region, consolidated a little bit, turned it into resistance, and finally is getting rejection of the resistance area. What I would do next is that I would simply just move to the 5-minute time frame chart. I would wish to see a change of character and break or structure happening. So in this situation, you can actually see that price, it was very much bullish on the 5-minute time frame chart. This is once again your impulsive wave. If I draw it for you guys, this is your impulsive wave, this is a corrective wave, impulsive wave, corrective wave, impulsive wave, corrective wave, and impulsive wave. Okay. Now here you got the change of character. Here you got the retracement. And now as soon as price would break below this low area, this eventually would be your break or structure. So I'm simply just waiting for price to break below this low area. As soon as this would happen, I would say that okay, this is your break, this is my break or structure. And as soon as I would get my break structure, I would simply just have the confirmation. You see, with the lower time frames, you would get your entry late. If I was only looking on the 4 hour time frame chart, I would have waited for change of character, which happened around there. And now, since last night, I have been waiting for price to break below this area. As we can see, I have already set my alert around here. As soon as price would break below this low area around here, I would get further entry confirmation that change of character has happened, a break of structure had happened, and I would immediately take a short position around here and then place my stop loss. So, for entry confirmations with the lower time frames, you may get your entry slightly late because you would be looking for two particular elements, but you would have a better trade opportunity because in that case, your entry is going to be solid. Okay, you would have the confirmation that things actually are happening, as per you would wish them to play out. Okay, is this clear, boys? What's the logic behind waiting for retest? Really, I'm sorry, I did not quite understand you. I cannot really understand the question. What exactly do you mean by waiting for pullback, waiting for retest? Do you mean in terms of support and resistance, or like in what terms exactly? You guys can also open up your mic and ask the questions. Completely fine with me. Why do we wait for a pullback retest before entering? Can you do Solana? I do have a spot position open on Solana. You can easily just find it out in my channel. First entry it was at $136. The second entry it's at $118, I guess, and the third entry it's at 105, 106. It's a long-term play, a spot play, so it could take some time to play out. Solana is sitting on a daily support area. Really, I still do not understand your question. Why do we wait for pullback retest before entering? If you are specifically referring to the part where you wait for break above or below a certain region, then wait for the retest part, then it's very simple logic because let's take the example of BTC, for example. Okay. So let's say that this was your resistance area. Price was rejecting off a resistance area. Rejection, rejection, rejection. Price breaks above this resistance area, and where exactly you got the confirmation that price has actually broken above resistance area? You have two choices. This was a candle that told you that we have broken past the resistance area. You could actually take a long position around here, and you would simply just be chasing the price. You would simply just be compromising on the risk to reward ratio. If this trade tends to play out well, you can actually see that this was a very bad trade because majority of the times from 20th of May to 7th of June, you were simply in a huge drawdown. And even back on 7th of June, you got a very small move. Okay. Instead of this, you could have not compromised on risk to reward ratio, have a very small stop below this low once again, and you could have targeted this high area around it. And once risk to reward ratio. Okay. So that's why we simply just wait for retest because, if I have to, just summarize this in one sentence, we don't really chase price, but we simply just wait for price to come back to us. Okay. So in this situation, instead of going after price, we simply just put your entry around here, wait for price to come up, and that's where you will be taking a long trade. Could you have a look at the VWAP indicator? You have asked this before, but not sure if you've seen it. Blockchain LLC, I was actually able to respond to this. I did not really take a look at it, but let's do it right now. Okay, so which VWAP indicator exactly are you referring? I have this ELD VWAP, which is non-anchored. I have this VWAP as well, which is once again an anchored one. So I would have to take a look into all of these VWAPs, the formulas, and then I would be able to respond to you. So waiting for a retest gives confirmation and gives better entry. Yes, exactly. You have a better risk to reward ratio. You're not chasing the price, but simply just waiting for the price to come back to you. Blockchain LLC, could you please just share the script of that indicator or at least the name of that? That's how I would be able to look at it. Just put out the name. How do you decide on DCA levels? It's completely up to you. You can do it, on the basis of some dynamic line. For example, I'm taking a long position around here, and I notice that the VWAP is somewhere around there. Then in that case, my second entry is going to be VWAP. But let's suppose that you drop Fibonacci from this swing low to this swing high. You're not really sure that price would be retracing to just 705 or down to, let's suppose 88.6 level as well. So your second entry would be 88.6 level as well. Okay, or It could be any other dynamic line, for example, EMA. It could be some trend line. It could be literally just anything. Okay, so your DCA is simply just based upon any single thing, any single confluence of your choice. Chose a VWAP for yearly, monthly, weekly. I'm still not sure. It's called MP VWAP. Okay, it's called MP VWAP. This one. Okay, so it shows yearly VWAP, quarterly VWAP. Um, it's basically the anchored VWAP, right? I think it's taking into account the average of something as well. So in this situation, the yearly VWAP is at 65,574. If I change my time frame, if I change my time frame, 65,000, yeah, it's almost at the very same levels, okay? 65,310. It's not changing position. I'm not really sure what exactly are you asking. This much of difference. Okay. As soon as you would move to yearly, I think this indicator, I'm not really sure, but I think this indicator is taking into account the average of something as well. MP, I just forgot why exactly I put MP in the script. Let me see. Fine editor. What exactly is the meaning of MP here? Multi-period. Okay, so multi-period VCAP, what exactly is it taking into account? Length, volume, although it should not really be changing any blockchain analysis. You have a legit question, I would be taking a look into it. Okay, I would get back to you that why exactly is it changing position. Although it should not be doing it, but I think it's taking into account the average of something. In one way, it could be taking it. It could simply just be changing the position because every candle, for example, in the case of, but it's still. I'm not really sure if it's the anchored VWAP or the non-anchored VWAP. Okay, could get back to you towards the end of the lecture. Okay. So we can do VWAP support. Yeah, VWAP support resistance, Fibonacci, trend lines, chart pattern. Absolutely up to you. You can take into account anything. Do you see ETH outperforming BTC in the next 6 months or so with the incoming ETF inflows, or do you think they will not be that significant? I don't really think that it would be that much significant. For one, just to get some idea, you can actually look at ETH BTC as well. Okay. For those of you who don't know, ETH BTC is actually a very good pair, which is basically telling you that, how exactly Ethereum is performing in comparison to BTC. Okay, so you can actually look at ETH BTC. You may get slight idea, but I don't see Ethereum outperforming BTC. Even BTC has not really started its own cycle. Uh, because but in one way it could be happening because ETH is still Ethereum still in this situation is to outperform, is still to cross its last all-time high. But the circumstances in which the spot ETF for Ethereum it was approved, they were not actually ideal, I would say. But in any situation, if I open up the daily time frame chart for ETH, this might be a good spot to buy. Okay. This would be a very good spot to buy. And by the way, these were two equal lows, and this was a good opportunity to buy some ETH, at least for a small move, 3481 all the way up to 3600. But you can wait. If I draw it like this, I did mention this like almost 2 to 3 weeks ago as well, that you can wait for ETH to pull back down to at least 3200, 3300, and that's where you can actually buy, okay? Because in this situation, you would have got the change of character, you have the daily order block as well. This daily order block, it's being followed by a fair value gap as well. This fair value gap, by the way, perfectly got filled and price perfectly bounced off the 50% of this fair value gap, okay? So a lot many confluences there, a few dynamic lines also. So it's quite possible that price would retrace down 3200 levels, in my opinion. If it does, it would be very good opportunity for you to buy. Place your stops below these lows, below 2800 levels, okay? And then you can target the new regions ahead. We see a fib setting, yeah, sure. draw the fib, go to settings. You guys can take the screenshot. Let me know when done. All right. Okay, guys. Could you also explain EMA how it works? Okay, so EMA, it's a very simple indicator. Okay, it's simply just based upon the concept of average. Okay, although there are slight modifications in the moving average indicator. For example, there is simple moving average indicator, SMA you would call it, or exponential moving average, EMA that we call it, or then there is this weighted moving average indicator as well. Okay, but EMA, it's a very simple indicator. Let's suppose that you have 200 period moving average applied on your chart. Okay, so what exactly a 200 period moving average indicator is doing is that, let's suppose you are on the daily time frame chart. So it would take into account, it would simply just add the last 200 candles, the closing price of last 200 candles on the daily time frame chart. For example, in this situation, in this candle, this last candle yesterday had a closing price of what was the closing price? 3513, and this candle had the closing price of 3561. What 200 period exponential 200 period moving average indicator would do is that it would simply just take into account the closing price of last 200 candles. It would add all of those values, and then it would simply just divide them by 200, and it would simply just display that as a line. Okay, simply just display as a simple value. Okay, so at every possible point, for example, if it was right here, it would take into account the last 200 candles counting from here. If it is applied around here, it would take into account the last 200 candles starting from this point backwards. Okay, so this is the major function, this is the basic function of a moving average indicator. In the case of an exponential, obviously it would be giving more weightage to the most recent data entry. For example, the most recent candle in the data, it would be given the more weightage. Okay, and simple moving average indicator, it would not give preference, it would not give weightage to any value, it would give the same amount of weightage to all the other values as well. So this is the basic function of a moving average indicator. Let's suppose the period is set at 9, then in that case it would take into account, it would simply just add up the closing prices of last 9 candles on whatever time frame that you have selected. It would add them up, divide them by 9, and it would display it as a number. Let's suppose that you have 21 period moving average indicator applied on the 4-hour time frame chart. Then in that case, it would add up the closing prices of last 21 candles on the 4-hour time frame chart and simply just divide the number it would get by 21, and it would display that as a simple value, as a simple line. Okay, this is the basic function of a moving average indicator. Just like you guys would calculate the average in your day-to-day lives. Absolutely simple. You know, the part with the volume is that volume, in the case of VWAP indicator, the volume weighted average price indicator, it simply in the formula not just takes into account the closing prices of a candle, but also the average volume traded at that particular candle as well. So in the data, you just don't have the closing price, but you also have the volume traded at that particular point also. That's why VWAP is given slightly more advantage. It's not just taking into account price, but it's also taking into account volume part as well. Okay, I hope it's clear. Any special settings on your EMA? No. The good part with EMAs is that you can only change your period in the EMA indicator. Any EMA indicator, you could only be able to change the period. Absolutely nothing else you can do about the EMA indicator. Yeah, you can calculate the average. You can basically just calculate. You can basically just add up the EMA indicator with some other indicator, for example, VWAP, for example, super trend or something like that. That is a possibility because you could simply just mix any of the two indicators. But that's obviously out of the scope of this live stream. Smo hit SL even. I'm not really sure. I don't think so. A stop loss at break even was at 0.5832. it's still, 5% down. It's still 2.82% down. It has not hit the SL break even. We are not really sure what exactly you're looking at. By the way, let's take a look at BTC as well. What exactly is happening on the 5 minute time frame chart, because I believe that we've got change of character. Yeah, if price would break above this area, then we would get a change of character. Not really sure, although, because once again, okay. So this was your impulsive move, corrective, impulsive, corrective, impulsive, corrective. Although I'm not really sure if this was no, this was not a break of structure. In that case, this is going to be your impulsive move. If price breaks above this high, then we would get a change of character. So if we break above 64,077 on the 5 minute time frame chart and give a candle close above, then on the 5 minute time frame chart, at least we would get a change of character. Then we would wait for another break of structure. And on the smaller time frame, like on the 5 minute time frame chart, we can try taking a long position on BTC. Okay, although it's absolutely not recommended, because once again, we will be going against the trend, but we can actually do that. What are the main indicators you use? I actually, use like anchored VWAP. You know, in this one you can actually set the date for the anchor. Then the ELD VWAP and EMAs, a mixture of ELD VWAP and EMA, basically average of both of them. Then I use, the average of all of these indicators. By the way, I have developed myself. Okay. Then, this dynamics line, which is basically the average of all the 100 period exponential moving average on all these different time frames. And this one is basically non-anchored one. This is the EMA indicator, and then that's it. Okay, that's very much all the indicators that I actually use. Basically, just slight modifications of VWAP and EMAs, and that's it. Okay, guys, I guess that's it for today. I hope you guys enjoyed the live stream. I would try my best to do the live stream next week, so although not really sure because I would be traveling next week. So, thank you so much once again for joining in. Any questions? Mentorship still open? Yeah, it's still open. You can respond in the ticket. So if you just enrolled like a year or two ago, so yeah, it's a very good opportunity for all of you to just enroll. Um, you can simply just respond to the ticket, or you can simply just open up and mention that you would like to join the mentorship program. For those of you, once again, who don't know, our mentorship program, once again, it's still open. You can simply just register. The entries, they are open. The new batch, it's starting very soon, like, in a week or two. So yeah, it would be a very good idea to enroll yourself as soon as possible. Okay. Thank you so much. Take care and have a great week ahead. Thank you. Thank